the next one. Now, this is NFTs in the banking industry. I'm waiting for the day when you go to a bank and when you open an account, they're going to give you some NFTs. So let me introduce you to Filippo, Doug, and Monty to take you through NFTs in the banking industry, new values to attract and retain customers.
I don't think Monty is going to join us today, so you just get me today with Filippo here.
Just the two of us.
Just the two of us. We'll make it as interesting as possible because I think our opinions here are going to be the dissent from what it is that is written on that slide above our heads. My name's Doug Hardman. I'm from Cleveland, Ohio in the United States. I've been in the fintech industry for about 20 years, currently Chief Technology Officer for one of the largest credit card processors in the US. I've spent the last 20 years working with banks, other fintech startups, other fintech companies, processed several billion transactions on the existing banking rails. So I'm coming to this from that piece, and then I'll let Filippo introduce himself.
Thank you, Doug. I'm Filippo. I'm from Italy. I'm from Milan, and I'm currently working for the bad guys, I would say. So I'm working for a bank, and we're introducing School Banca Sella. But actually, we are like the very first company, the very first bank in Italy that we are currently introducing the cryptocurrency solutions since 2023, and we are currently developing a lot of things into the Web3 and the NFT space. And I was actually, I'm actually happy to be here and to represent a little bit how we are actually rolling out the NFT usage on multiple sites. That could be from credit factoring up to involving customers and making sure they stick to the products and stay with that. So yeah, really happy to be there with Doug so we can give a couple of different perspectives, no?
Yeah, so let me start this off. I'm going to ask a few questions. So raise your hand if you have a bank account. Now keep it up if that bank account can have cryptocurrency sent to it. One. Oh, and he messed up. He didn't mean to raise his hand. That's the problem right now. The banks could fix a lot of this immediately if they got involved. They don't want to get involved because right now they've got a monopoly on holding money. So the future of banking isn't probably going to come from a traditional bank who could fix this problem immediately. Raise your hand if you've got an NFT. Everybody in the room. Raise your hand if you've bought crypto in the last year. Everybody in the room. This is a market. Now, I understand we're in a bubble right now, this bubble of NFT.London where we're all crypto people, we're all believers, we're all into NFTs, but this is a huge market, and this is a huge market opportunity for banks. What happened last year with NFTs and with the DeFi protocols, I consider that a false start. I consider that that got all the believers into the pool, but the Main Street America, what I say, I'm standing here in London, Main Street isn't ready for that yet. There were too many people that put their money into some crazy investment that was a bazillion%, APY, the token wars of 2021 and early 22, and they lost their seed phrase, or they lost their password, or they lost their whatever, and they lost everything. And there was nobody to call. There was no customer service number for someone to call to get their passwords back. And that's why banking could fix a lot of the issues that we're having with mass adoption with crypto. So my claim to fame is back in 2011, I bought my first Bitcoin, okay? So I bought 4,000 Bitcoin in 2011. I paid $1.10, $1.15 a piece. I used them all, this was a new currency, so I used them all to buy this watch. So I spent 4,000 Bitcoin on this watch. Now, which would you rather have right now? 4,000 Bitcoin or a nice Rolex? You'd rather have the Bitcoin. There's no way I would have diamond-handed it all the way to 60,000 or 20,000 or whatever it is now. But that got me thinking, boy, this is cool. So I got into crypto back in 2017 for a second time and built a company that was trading cryptocurrencies off of a bot. We made a bunch of money, and then we went to withdraw that money. And we put it through Gemini, and then we put it into our US bank account. And then 2 weeks later, I got kicked out of the bank because I had too much in cryptocurrency transactions. So we moved to another bank. And then we got kicked out of that bank too because we had too much in cryptocurrency transactions. So I'm on bank number 3 now, and I have all this money, and we can't spend it because we can't get it out of crypto. That's, again, a problem that the banks could fix. If just one bank or two banks or a global bank were to emerge and say, yes, we are going to accept cryptocurrencies as something that is going to be in the future, and we're going to allow NFTs to be traded through our banking system, and we're going to keep it secure with a custodial wallet, that could fix so many issues so quickly. And you're trying to do that right now. So talk for a minute about that project.
Exactly. So the point actually, you touched base with a lot of different things that we are trying to address currently. First of all, the fact that the current adoption into the crypto space, of course, all of us, we raise our hands when it comes to crypto, when it comes to NFTs. It makes sense. No, we are under the same dome. We're within the same bubble. But the real fact is that right now, if I'm addressing just, for example, the European market or staying to the Italian market, the adoption is on average 4%. So European should be 4.2%, Italy should be the same one. So it's actually a very small one. Moreover, all the things that happened that was saying Doug, that could be you lost a seed phrase or whatever else, you can have actually those problems. What you're trying to do as a bank is actually increase the mass adoption, making sure we are not a big bank in Italy. We're actually, I would say, a small one, but with very old tradition of innovation. And what we are saying, or what we're doing right now is actually making people understand that they can purchase crypto in a very easy way, just straightforward from their own bank. We envision a world in which bank can be the most important holders worldwide of NFTs. So, no, imagine a world in which you can NFT your real estate, you can NFT your credits, you can NFT everything that your mortgages, everything that you already are doing through a bank. But what happens in that case? That everything will be backed from the blockchain technology, you will back it from smart contracts, so you can actually do things that you were supposed to do previously in, say, in a time span of 1 month, 1.5 months on average. If you're going to ask a mortgage for a house in Italy, you can even wait a month, and you have to provide huge due diligence. I don't know the other market, but I can say that it's not as easy as you can imagine in the Italian market. Imagine if you can do so in just like asking everything through your bank account, doing everything. It could be, we talk a lot about metaverse, so imagine that you have a space in which you don't have to go to the branch and speak to someone, but maybe you can do everything through that and make the exchanges through smart contracts and using NFTs. We are currently developing not only the cryptocurrency offers that could be custodial, so you won't just like do trading within the bank, but you will have your own assets, digital assets within the bank account. But imagine a world in which, for example, you are a small and medium enterprise, you have an invoice and you have to ask credit for that invoice. So you do what is called credit factoring. You give me a credit of $100, I give you back 80, say for example, immediately, and I take the risk of the overall credit. Imagine if you can put this into an NFT, lock it into a smart contract, give back stable coin instead of fiat, and maybe use those stable coins to scale DeFi protocols. We are actually envisioning this kind of world, and we are actually building this kind of MVP or POCs, call it whatever you want. So I do think that, moreover, Doug touched base with another important thing. Right now, banks are thought as countrywide, not globally. So we can have, like the bank I'm working for, just working in Italy. There could be other Italian bank that maybe has branches in Romania and Polonia, in other countries within the Europe. There are, of course, big banks in the US market that are working, of course, within all the US. So we're addressing the point with way more countries. But the fact is when it comes to cryptocurrencies, when it comes to NFTs, when it comes to our environment, the one that we live every day, the point is we're not scaling countrywide, we're scaling globally. So we have to think on an environment in which even banks that have been smaller, like for 150 years, as the one that I'm working for, can actually scale globally in a matter of nothing. Of course, the flip of the coin, and this is probably a topic that we should address, is the regulatory one. So what will happen, what would happen on the regulatory side, given the fact that right now we're having MiCA for the European market, maybe we're having something different for the US market, I don't know actually the regulation over there. So how can we address and try to be supportive, no? And try to solve the solution either as bank, as a payment provider, as whatever already working in the traditional finance.
And that's the problem that I see on a daily basis in the U.S. So, all of the transactions that I see, there's all these archaic formats that make up all of banking. Like it's either ACH with a notcha file, or it's an old ISO standard for your credit card transaction. Like it took this Herculean effort to get the U.S. just onto chip and PIN, which all the rest of the world had been on for a decade. but it was a giant pain in the ass for the Americans to put the little chips on their cards. And that was a whole refresh of all the equipment and all the everything. I can't imagine the effort that is going to take to get banks into crypto, and that's the problem. You know, we're all believers. We're all there. There are, you know, billions of people using cryptocurrency right now, and the banks are turning a blind eye to it because it cuts into what has made them special, where they get to hold all the chips. You know, and there were a few DeFi protocols late last year that had a whole lot of success and a whole lot of people and a bunch of money rushed into it, and then they turned out to be rug pulls. Like, that was a thing that happened, and that was a great opportunity for the banks to say, see, that's what's going to happen if we get into crypto. And that really sucks, because all it takes is one or two banks to say, yeah, we see that this is going to be a thing, and that's where every crypto native person in my country anyway would flock to. If there was a bank that said, yes, we believe in this, and I will let you pay your invoice in stablecoin or in dollars and wire it just as quickly, that would take off. Now, there's a few banks that are like challenger banks in the US. There's one I use called Mercury, which is crypto-friendly. Not that I can send my crypto there, but they won't kick me out if I have a crypto transaction. So that's what passes for good in US banking, is not getting kicked out of a bank for having too much in crypto transactions.
Yeah, but moreover, I see that this regulatory thing can be somehow addressed. No, so we're actually, you can be a bank, you can be a traditional finance institution, but at the same time, you can start working side by side with the regulators to make sure that everything you do is compliant, not only on our side, but even on their side. So actually, we started back in 2016 to give the first bank accounts to all the most important VASPs in Italy. So from Binance to Coinbase, we helped them to create these kind of things. You can imagine that we didn't do this by moving against Banca d'Italia, that is like the regulator, or Consob or whatever else. We actually worked along with them to make sure that what we were creating was exactly the one that they wanted and that we wanted at the same time. On another side, I can understand, no, as a bank perspective, why cryptocurrencies can be an issue, no, because of the volatility or because of whatever for a bank. But on the other side, there are a lot of things that are actually here. We're using them every day. They're called the stable coins, and that could be leveraged for a huge amount of things. Imagine B2P payments worldwide. Imagine having a stable coin that you can send over. You activate the purchase or the transaction through a smart contract or whatever else, and you can use that same stable coin to enable all other things or global remittances. And you can actually provide them as a bank. You don't need exactly actually to build up your own stable coin. You can even use already established stable coin. But in that case, I envision even a world in which you can somehow give a trust to those kind of protocols that are building the stable coin itself, because you're a bank that are supporting them.
Yeah, I think the innovation is going to come from not the banks. I think I've established I'm pissed at banks. I think everybody in this room has heard that I think banks suck. However, I think what's going to end up happening is a company like Circle, which is the USDC stablecoin that's out there right now. I think there's going to be a time when a company like Circle is going to step up and say, okay, we'll start taking risk, we'll start acting like a bank, we'll start changing to fiat. Or it could be another company that comes up with a stablecoin. Or it may be a company like Coinbase or Gemini or Binance or one of those that just decides they want to start being a bank and doing it themselves. And so that's the huge opportunity right now, is getting banking to accept crypto. You know, I can't wait for a time when I don't have to have a hot wallet, a cold wallet, a bank account, a secondary wallet for something else. Like, I would love to get to where everything is one place on a custodial wallet that I could trust was going to be, you know, backed and covered, much like my bank account right now is insured up to, you know, $2.5 million by the federal government. I would love for there to be a case where a government agency stepped behind a bank and said, okay, we will say that this crypto is here, as long as it's a stable coin. Like, we're not talking about Ethereum or Bitcoin or, you know, any of these others. All it takes is just a singular stable coin and a bank to say, yes, I'm willing to do that, or an institution that's willing to do that. And it could change all of this for all of us. You know, we could be, speaking in 2 years at a conference with 50,000 people here instead of 5,000, because it's mass adoption, and people would accept that that's something that's normal then. You know, my mom knows nothing about crypto, and she would be afraid of crypto. But if her bank took it, maybe she would look at that. You know, she's looked in the past at other things. Maybe that would be something that she would be like, what's that? You know, my father, when he passed, we looked at his Robinhood account, and he'd bought some Dogecoin. He had no idea, I promise, he had no idea what Dogecoin was. He just saw that it was going up in value and thought that it was a good idea to buy. But that's the type of thing that it's going to take for crypto to be really global and worldwide and accepted as a form of payment. Like inside of our group of people right now, absolutely. You know, I could wire, you know, anybody in this room some ETH right now and they would happily take it. But on a global scale, we need mass adoption, which means we need banks. And maybe it's not a bank today that does it. Maybe it's some other company, some other startup that becomes a bank and just decides that, yeah, okay, let's set our own regulations up. Let's set our own KYC up. Let's set our own KYB up. Let's do this in a way that covers off on regulatory compliance, but also makes sure that we're not alienating customers at the same time.
Yeah, furthermore, I can say on top of this that for a very long time, what banks have been done is like trained to explain complex things in a very easy way. So when it comes to finance, it's not that normal, no, to understand exactly if you open your first mortgage to buy a house, not that normal, no, to know exactly how it works. So this is another point I think we should touch base. So it's like I mean, the banks can help doing these specific steps. I was in Lisbon in the previous days. I was in the Web Summit, and what I've seen is that there are still, unfortunately, I mean, there was a rise of Web3 and crypto solution even within the Web Summit. Like 25% more or less of all the stands were about crypto and Web3, and I was more than happy on that. But the thing that is still lacking, on my personal perspective, is that Web2 is one side, Web3 is on the other side. Traditional finance is one side, crypto is on the other side. So it's like being maximalistics even more. So you're just not maximalist of BTC, ETH, or whatever you want, but even you're maximalist of being on one side or on the other of the coin, no? But it's still the same coin, so you already have to mix and match both of them. When it comes to NFTs, so addressing actually one of the topic of today, I think that you touched base with KYC and KYB. These actually could be real example use cases on how you can leverage NFTs to make sure that the KYC can be like nothing more. It's as easy as this. Imagine that you already have your digital identity within a specific NFT, and then you can leverage it in whatever activity you're doing, even in traditional finance or either in the institutional DeFi. You may have heard that one of the most important banks in US launched the first activity in the institutional DeFi with Polygon blockchain like 4 days ago. So it means that they are going onto that way. But if you can leverage NFTs, so token that can actually be unique, and they can represent each one of us with all our own characteristics, even the credit scoring, even our activity in the market, in traditional market, in the crypto market, you can solve a lot of problems. One of the problems that we're living right now in Italy is that once you have to do the tax report, I don't know how it works in the US, but like in Italy, if you did some transactions into crypto space, you have to bring like a huge amount of paper to your accountant and see, okay, here's all my information, put it into my tax report, and the tax reporting can last 1 month, 1.5 months. Imagine all of these embedded within your own NFTs, and of course there are solutions or scaling like I mentioned Polygon, but it can be a lot of them, can help you actually create your own specific, let's call it digital twin, let's call it digital identity, let's call it however you want, but actually you can do it. Imagine that all of these can be done by the bank once you do the KYC for the very first time, and you're doing the KYC for everything. I know that the word KYC or KYB scares most of us, but still, it's something that will be needed at a certain point. Let's see how we can merge the KYC and the KYB with on the Web2 side with the Web3 mind.
Well, and I think that's important. Like, there could be a case, like here's a business idea right now, start a company that'll do KYC on a soul-bound token that can't be moved from that wallet, so that that person is attributed to that particular set of circumstances or those things. We do KYC all day long, at my current company, where we're onboarding 100, 200 merchants on a weekly basis, and we have to run credit checks on them, and we have to run personal credit on everybody individually, and there's KYB, and there's KYC, and then there's match databases. Or have they been bouncing checks? Have they been deleted from other accounts? Like all of these things that we have right now that I pay a service for could easily turn into an NFT that would be soul bound to a wallet that would take care of that in 30 seconds. And that's the type of thing that has to innovate before we can get to a part where we're all singing Kumbaya and living in this happy crypto world. Like, that's just not there yet. I can't wait for that to happen. I've been waiting for years for that to happen. It's just not there yet. I think we had this false start last year where everybody like understood, oh wow, you can make a bunch of money in crypto, and that dumped a ton of people in here, and then people got wrecked, and then we'll never get those people back. Like, that's a thing that happened. But I consider it, again, a false start, because I think at the end of the day, what it's going to take is mass adoption for people to understand, oh, okay, yeah, I lost money in the stock market too. I lost some money in crypto. Like, somebody will think of those two things as the same thing. But the reality of the situation is banks need to do better, because they could fix a lot of this, but they're not. And I can't wait for a day where I can just have a wallet ID that is also my bank account. And it may be a company like Binance or Crypto.com or Coinbase or Gemini. Like, they've all got eyes on the prize somewhere. There has to be a global leader in this, and there just hasn't been one to emerge yet. Because this would be a very different conference if everybody in here was able to keep their hand up when I said who can dump crypto directly into their bank account.
Yeah. And last but not least, maybe when you started at the very beginning, you said we envision a world in which now, like in a couple of years, there won't be just like 3,000, 4,000 people, but maybe 50,000 people. At that point, probably we will see a solution, or we will see different solution in which the same question will be asked, and you will see completely different responses from the people within the place. So just to close up, I do think that both of these environments that are currently different should coexist. We should find a way, and it's not by just like being will of crypto or will of bank and being completely opposite, but try to find a way to cooperate and see what will happen in the future. So yeah.
Yeah, and so to close out, to use a crypto term, we're early. So there you go. Anyway, thank you. That's our talk.
Thank you. Thank you.